What's going on, everybody? I'm Chris Franks with Texas West Capital. Going to take a look today at my my macro account for this cycle, what we're looking at as far as Bitcoin goes, possible targets, things to watch out for, all that fun kind of stuff. We'll take a look at Ethereum and its local kind of range here and what it's doing there, just to kind of give you guys a heads up on what may be coming. We'll talk about the CPI. We'll talk about JP Morgan. And I've got a couple other announcements coming up as well. So hopefully y'all are ready to do this. Do me a favor real quick before we get going here. Hit the thumbs up and the like button. Share the link. That helps us out a lot. Gets the algos kind of looking at us a little bit because, I believe we share much better information than pretty much everybody else out there, or at least most people. And so, it's hard to get in front of the noise. There's two things out there, guys. There's noise and there's signal. Most of what you guys are running into every day is noise, right? It's a lot of people who have no real experience in markets, repeating things that aren't necessarily true or half true or whatnot. Things that you just don't do when you've been in, the markets for 30 years. So, yeah, that's what I try and get you beyond, is get you beyond that noise into the signal area. So hopefully y'all are doing all right. I see Mr. B is a little upset, says SPX, NDQ, all-time highs, Bitcoin in the gutter. What the heck? Yeah, well, to be honest, to be realistic here, the SPX, the NDQ, the Qs, they were all sitting right below all-time high. So, I mean, you get the big bump on the CPI, right? So let's talk about that first. CPI came in today. Now you go, okay, well, why did the CPI come out today? First of all, it's late. Second of all, the government's under the shutdown, right? So it shouldn't be in there. But the reality is, a big part of the reason why the CPI was released was because it's required in that Social Security. When they try and figure out, how much they're going to do for Social Security and whatnot, it's required. It's part of that formula. So they have to do the CPI. They're legally required to do the CPI. So it came out late because government shutdown, not a lot of people, working in government comparatively to what it usually is. That's why y'all got the CPI today. And as you saw, or maybe you didn't, we were expected to be at 3.1%. It was at 3%. So it came in soft, came in cool, which is why everything kind of got that little boost this morning about 8:30 a.m. Central, or 8:30 a.m. Eastern Standard Time, 7:30 a.m. Central. So, these are things that are kind of going on. We're going into what, 3 weeks now, 4 weeks of government shutdown. Things are going all right for me. I don't know about y'all, but it seems like all the services are still running all right. Guys, the reality of it is there's a lot of bloat in government, and there always is, because government's easy money, right? You guys can look at how much government waste has been, happening over the years. They don't really, check what's going out to other than more than minimal degree. So there's a lot of fraud. There's a lot of waste. As far as government services go, you got a lot more people hired than not, because that's what government does, right? Government feeds upon itself. So, it creates more and more positions that not necessarily that are needed. And then you and I, as the taxpayer, foot the bill, as well as, with our currency, right? Currency becomes debased after a while. Okay. Let me see here real quick before we get going. Blaze, what's up? Says Chris, any opinions on funded accounts like Apex? The objective is to lock in consistent profits, minimize risk, and eventually build an account to trade a good amount of capital. So actually, it's a pretty good question, Blaze. So I trade with our members. I trade live every Monday, Tuesday, and Thursday morning. And we trade minis, right? Usually we trade S&P minis. But I use funded accounts with that. And I've passed, since April, I've passed like 8 or 10 of them. I've blown 3 of them, I think. So I've got about a 70% win rate on those. But I've done everything from Apex to Top Step and some others, and I'm going to do others as well. Part of why we do that is, one, because we trade like the 1 minute time frame. So some people think that's what they want to do. So I show them what the reality of trading that is. But second of all, it's also so that we can discuss, well, if you're going to trade futures prop accounts, how do you go about it? How can you increase the odds of your success so that you can pass the eval and go on? We've had numerous students in here already passing their evals, more than one, like Roy here. I see Roy's talking in there. Roy passed it in like 3 days with Top Step there. And so, we go through it, the ins and outs, and I show you what it's like to really be a trader, guys. Listen, the one thing I've been doing this is 31 years this year, okay? The one thing I don't do is I don't blow smoke up your rear end. I don't tell you it's all going to be easy. It's all going to be gravy. It's all going to be good. You're never going to have to worry about emotion. You're never going to have to worry about all these other things. You don't have to worry so much about focusing once you've been doing it a while. It's all BS, guys. It's all BS. We're human beings. And so the great thing that our students get to see is really what it means to be a trader and the importance of that proper risk management and how you approach the trading and the trades themselves. So yeah, Blaze, there's some out there. There's some, a lot of them probably those, what do you call those, funded accounts that are really just out there to make money off you failing your, you paying the fees to fail over and over and over again. Okay. But part of that is just what it is itself, what trading is itself, what humans are. As human beings, we tend to get ahead of our, get out in front of our skis, right? Our emotions take us. We want to take $100 into $1 million overnight, right? And if we're not doing that, we're not happy. So we're taking on excessive risk without using the proper risk, without putting in that proper risk management. And, at the end of the day, yes, some of the prop firm trading rules are kind of harsh, but if they're really going to allow you to trade their money at some point, it's money, it's their game, guys. A lot of people complain, it shouldn't be that hard. It should be that. Well, you know what? Put your own money together, create your own prop firm, and then you can make the rules, right? But it's a twofold thing. One, they know they're going to make most of their money on failed attempts, which is what we work really hard with at TWC, at the Trading Academy there, to make sure that you're not one of those victims. But the other thing is, if you get to that point where you're actually going to trade their money, trade real money, right? Not just a sim account, they're going to want to make sure that risk management and consistency are the utmost important things, are the things that you do. They don't want to see some knock it out of the park, 10-point or 10% return in one trade. They don't want to see it. They want to see, they would rather see consistency at 1% returns consistently, utilizing proper risk management where they're never really significantly any kind of risk. So, you can do that. And I don't have anything against it myself. Like I said, I've shown how it's done here, past multiple, accounts here on multiple different prop firms with our students, in the mornings. But they've got to see along the way, what it's really like to trade. Most of these guys that get out here and they're trying to tell you to trade these funded accounts, they make their money off their referrals. That's why they do it for free online, guys. Because they make their money off their referrals off you, and you keep coming back, and they keep promising you, if you just do this, you're going to make it, you're going to make it, you're going to make it, right? They don't really focus on proper risk management. They don't focus on how you need to approach it, especially in relation to how you might normally approach, which for most people, it's going to be significantly more proper risk management with that than what you do with your own money. But if you do it, if you pay attention, if you take heed and you do it correctly, there is a lot of potential for return out there. But don't think for a second that if you've been doing this 30 years, all of a sudden your emotions don't matter. They do. They still do. You're not going to be 100%. Sometimes you're not even going to be 50% on your trades. We kind of do this thing, right? We can be 70%, 80% wins, and then we drop down to like 20 or 30% wins for a bit, right? That's just what it is. We get caught up. And as human beings, you should be focused when you're trading, right? Most of us are out there trying to work a job and pull out our phone in the middle of our job because an alert went off to try and get in or get out of a trade, right? Don't do that. You're just asking to lose money. But see, these are the realities that people aren't going to teach you. They aren't going to tell you. Why? because they want you to come in, they want you to buy the whatever referral program they're doing, and they just want you to do it because they know you're going to continue to try it. They just got to keep sounding positive about it. Not really giving you any alpha, not really helping you out, right? Those people also tend to remove a lot of their failed stuff, right? They only show the good side. They never show, or very rarely show, the bad side. And these are things you have to watch out for out there, right? But everything we do is live on there. The recordings stay up for about a month or two. And then we cycle through and we kind of get rid of those that are further back because, there's only so much space in our, what do you call it? Our memory, our hard drives, right? To hold it on there, but you get to see it on there. So yeah, Blaze, again, you or anybody else that wants to do it, you just have to be realistic. And I say this all the time about trading, especially with prop trading, because the rules are a lot more intense than what you're going to be used to, especially if you don't normally utilize proper risk management. And then there's this thing about most of them aren't going to let you hold overnight either. So not only do you have to get the right trade, right, and use proper risk management and make some profit, but you also have to do it by whatever it is. If you're using Top Step, it's 3:10 p.m. Central, 4:10 p.m. Eastern. Yes, the future market don't close for another 50 minutes, but Top Step does it at that time. Apex, if I remember right, you can trade until, up until they close there at, 4 p.m. Central, 5 p.m. Eastern. There are some prop accounts that will allow you to hold overnight. Also, you have to make sure that you're not holding. Most prop firms will not allow you to trade news events, or at least not the big ones like the NFP, the non-farm payrolls report and stuff like that, right? You'll have to be out a minute before, and you can't enter until a minute after the news drops. So, there's just those things that you have to pay attention to. So it does become more compartmentalized, right? It is more strict. There are more rules, but you can still make money. You can still win. You can still do it. Okay. And that's again what we're kind of showing there. Let me see. I think I'm going to end the question here before we go further. Let me see. Roy, what's up? He said, I went 5 for 7 today with the range system. Oh, yes. That's one thing I want to tell you about. So I've distilled what we teach. So, what I teach at TWC, at the Trading Academy, is really an understanding of liquidity. How does it develop? Where is it going to flow? How can you figure it out? All that kind of stuff, right? That's really what we do at the end of the day. Along the way, we teach you how to use Wyckoff method, which is a range trading type thing, how to use Elliott wave, which is based on human emotions, and how we do, because at the end of the day, that's where the market moves. It's based on humans, right? Price action volume. So we teach you some of the more pertinent SMC concepts, but really focus on the volume plus price action. That's where we really shine. And what I've done is I've distilled what we do down into a system that is going to make you significantly more successful as a trader, right? And so I've done that, and I taught our students that this past week here. And you can actually jump in it without any previous experience at all, learn it, and just, be set up to actually understand how to trade a little bit better with this specific setup, right? I'm actually going to do a training event on that for everybody that's not in TWC. I was trying to, I'm a little bit late here because I was trying to set it up on our platform to give you a place to kind of sign up for a wait list if you were interested in attending that, right? Maybe you don't want to pay, we charge $179 a month. Trust me, well worth it, guys. Well worth it. It's worth a lot more, but that's what we charge. So if you're maybe, oh, I don't know, who is this guy? I don't know. He's just talking. Maybe he's like everybody else and does not do it, which is, I can tell you I'm not, but, I'm the guy with the company, right? But this will teach you, or maybe you don't want to really learn, which I think everybody should, but some people just don't have that desire to actually really learn how that liquidity works, right? But if you wanted a system that's based on that, right, without having to know that, this is something you're going to want to sign up for. So I will, if you follow me on social media, follow me at Texas West or at TX West Capital on X. You can follow me here, youtube.com/Texas West Capital, facebook.com/Texas West Capital, instagram.com/Texas West Capital. Follow me on one of those. And today here, I will post a link where you can join up for that wait list if you want to attend that and learn it. It's going to change. It's going to absolutely change the way that you look at trading. As we saw here, Roy here was saying right there, I went 5 for 7 today with that system. So, I mean, you don't have to trust me. Roy just came up here and said that. Works on any time frame. So whether you're a scalper on the 1 minute time frame, or you're a day trader, or you're a swing trader, or a larger positional trader, this works on all those different time frames, which is pretty uncommon across most strategies and techniques that people teach you. So follow me there, and that way you guys can get set up. Trust me, you don't want to miss this. It's absolutely going to just change the way that you trade there, right? Let me see here. I'm Deuce. What's up? Says, hey, Chris, I don't know if you recognize my name. Been lurking since 2018. Sold my Bitcoin position, bought a house outright, and retired at 43. Thank you for your wisdom. It definitely helped. My man, so excited to see that. You know, everybody's different, right? Everybody has different goals. Something I've been known to say in the past, and very much believe this, is that true freedom is wealth. Okay. People are like, oh no, my government can give me freedom. No, if your government can give it or take it away, it's not a right, it's a privilege. And if they can give it, they can definitely take it away, and they will, right? That's what governments do. But if you have enough money, you can move on to a different government. You can move out, right? Even if they say you can't leave, you can leave, right? Even if they say you can't enter, well, you can find somebody that can sneak you in and get you entered into a country, right? Not saying you should do that, guys, but what I'm trying to get to a point to you is wealth. That money you have, that is true freedom. It gives you the opportunity to make choices on a scale that most people can't. You're no longer required to hunker down, right? Like somebody, if they're struggling, let's say somewhere here in the US, they're struggling in some town or some state, it's tough to move, right? It costs money to move. You got to get your stuff packed up. You got to move it. You got to get rent. You got to get your first and last month's deposit. You got to pass a credit check. You got to have another job, all this stuff, right? It's hard. Money, wealth allows you to do that. So I'm Deuce, man, really excited that you were able to do that. Some people, they don't want to sell their Bitcoin. That's fine. But, if your goal is, hey, listen, I want to have my own place. I don't want to pay rent anymore. Still got to pay, property taxes and all that nonsense. But hopefully that'll go away, sometime in the future here. But, man, do it. It's worth so much more because it allows you to have that freedom of stress in your mind, right? Let me see here. Let me see here. All right. So anyway, so that's that there. CPI came in soft. That's why you guys got that bounce this morning. NASDAQ, the Qs, S&P, all that popping up new all-time highs because it was sitting right under the all-time high, right? So boom, pop up. There we go. Bitcoin didn't, and people were feeling butthurt about that, some people, but it is what it is, right? What are you going to do? Bitcoin is a bit further off of its all-time high than they were, okay? Let me see here. What else was I going to talk about before I got to my Bitcoin count and targets here? Oh, JPM. Y'all might have seen, if you follow me on X, you might have seen me post this. If not, or if you follow, if you're somewhere else, you should check it out. JP Morgan is allowing Bitcoin and Ethereum as collateral for loans. This is huge. If you follow me and watch our Wednesday Beards and Bitcoin show, Bitcoin as collateral is something we've been talking about for the past year and a half that the show's been around. as Bitcoin became bigger and big banks started, recognizing whatever, we're going to see it be used as collateral, right? This is the big thing about Bitcoin, guys. It isn't about Bitcoin as a payment system. Stop thinking about that. It's not Bitcoin as a payment system. The big thing about Bitcoin is going to be providing that collateral, right? So that your dollar is going to be collateralized basically by that Bitcoin. So as far as the big global system goes, Bitcoin is there in the plumbing, right? It's making the rest of fiat possible. That's the thing, right? That's what Bitcoin's, I think, greatest and biggest use is going to be. Is it going to be the thing and everything else is going to die? No. Let's be realistic, y'all. I know it's romanticizing to think about it and whatnot, but that isn't what's going to happen. Okay, but that doesn't mean you don't need that, Deb. You don't need the dollar to die off for you to be able to be really successful with Bitcoin. The best thing that can happen to Bitcoin is it becomes that underlying of the system, right? By the way, the big thing about the JPM thing is not just that it's allowing this, but somebody hold Peter Schiff's hand here, because they do, since about 2011, they've allowed gold, but only in things like their securities desk, think big institutional stuff. A very narrow segment is allowed by JPM to use gold as collateral on their loans. The Bitcoin and Ethereum, whatever, that becomes a whole different thing. It's like anybody can use that. If they can get a loan, obviously, from JPM, but the collateral, right? On Beards and Bitcoin, probably a month or two back, something like that, we talked about how these fringe mortgage participants are starting to allow Bitcoin as collateral for mortgages. That's huge. That's huge, guys. It's not mainstream yet, but we're getting there, right? This is the big thing about it. Yeah, like Bamboo says, just make sure you have enough money left to pay the loan while Bitcoin is in a bear market. That's your big thing, right? But as right now we're used to Bitcoin as collateral with a really high margin on it. As it gets more and more into the mainstream banking, you're going to see that collateral, that margin requirement drop significantly. You're going to see it be more like real loans, right? Where you can get like a 10% margin on it or something like that, which will bode a lot better for things like that when you do have the drawdowns. But here's the other thing. You may have noticed, and again, we'll take a look at it here in a minute, Bitcoin prior to this cycle usually had a blow off top, right? It had this steep run up. That's all retail. That's a retail thing, right? You look at what's going on with Bitcoin now, and we kind of move up, and then we're sideways for a while. And we move up, and then we're sideways for a while, right? In this like channel that we're going up. This is what it looks like when a fringe asset becomes more mainstream, because you get the mainstream institutional money coming in, and they have a much different view on how to get in and whatnot, right? It isn't this sudden FOMO in, everybody's going to FOMO in and run into a blow off top. Not saying we can't have one, but I'm saying right now, the reason why this cycle looks so different than previous cycles is precisely because of that institutional involvement. Any fringe asset or, really risky asset, really new kind of thing that eventually became mainstream institutional involvement, this is the same way it worked. Yeah, you had the big blow off tops prior with retail jumping in there. And then when institutions got in, you had a more managed move up there. As my friend Andrew, AP_Abacus there, not this Andrew that's in here, my other friend Andrew from Arch Public, as he likes to say, we're getting higher floors, right? Institutional floors are higher. And so this will be interesting, right? Again, it doesn't mean we can't have a blow off top, but if you're wondering why, if it seems like it's been different this time than other cycles, it's because it has. And this is the reason why, which is also why, again, we will get into the charts here in a minute, why I'm thinking we're going to have, extended cycles from now on. We're beyond the 4-year cycle. Now, I don't mean necessarily that we're going to have 8-year cycles or anything like that, but we might see something closer to a 4.5 or 5-year cycle now. It's because of that institutional money coming in and the way that Bitcoin goes from a retail fringe kind of asset to this more mainstream institutional asset. It's just the way that that money flows in there that ends up changing that. Okay. Let me see here. Andrew, what'd you say here, Andrew? If you're new to trading here in stream, try TWC. It's 100% worth it. Learn a ton, keeps you grounded in if implement system would be long-term profitable. Andrew would know. Andrew was a longtime follower of me here on my live streams. And then one day he finally took the plunge and jumped in. Less than a year later, was just absolutely killing it in the market. Absolutely killing it. And so, you know, if anybody's going to know, Andrew would know joining us there. All right. But, you know, again, I don't, I think a lot of the issue that we have at TWC is I don't go out there promising a lot of stupidness, right? I don't guarantee you're going to be a great trader. I do everything I can to help you if you're putting in the work and asking the question, doing that stuff. But, you know, at the end of the day, a lot of whether you're going to be successful or not depends on what are you actually doing. It doesn't depend on me, right? I don't trade for you. All I can do is help you. All I can do is answer questions if you have them, right? That's what I do. And try to, you know, get you away from all the things. So here's the thing. I've been doing this 31 years this year. I've talked to thousands and thousands, probably tens of thousands of traders over that time. And we all, I mean, almost exclusively, we all come in with the same thought process and the same wrong thoughts and the same misgivings about markets and about trading. And so a lot of what you have to work for is getting through that, right? It's getting through all that, those misnomers and the way you're so sure that trading works when you first come in. And heaven forbid you come in and have a great trade right near the beginning, because you're going to think that you're something special. You're not going to be realistic and go, well, I just got lucky. You're going to think, man, I know what I'm doing now. And then you're going to try and repeat it over and over again. And you're going to keep losing money, right? And usually what happens is just before you're ready to give up, you'll have another good trade. And you'll be like, oh, I knew I was good. Okay, so I'm good. It was just whatever. And you'll go losing more money again, right? But this is what everybody goes through. This is what we all kind of do when we come in. As I tell everybody, you know, if you're looking at 95, 98% of the retail traders that come in are out, right? They come in and then they leave because they're broke again, right? Everything they put in the money market, and usually more, is gone. So they come in, a few months later, they're out broke, right? And you also recognize that most of them follow the same free advice that's online. Let's use a little bit of common sense here. Let's use a little bit of logic. If they're following the same free advice that's online, and almost all of them are out, what does that mean? That means if you want to stay in, you have to do something different. You have to do what the other 2% are doing. And it's not following all the free, silly stuff out there. All the stuff that makes you feel good as a retail trader, but really is just a bunch of half-truths and often outright lies. It's the same garbage that's been flooding, you know, people's emails and newsletters and now social media as when I first got in. And it's in every market. It's the same nonsense. So you have to move beyond that. You cannot sit out here and think, oh, I'm going to do, you know, I'm going to follow the same free advice everybody else does, and I'm going to do what everybody else isn't. That doesn't make sense, right? Does that make sense? It doesn't make sense. Does that make sense? You see what I'm saying here? But we don't often stop, you know, quick enough or even at all to even think about it. And so we get stuck in that circle and the cycle of doing the same thing over and over again. And then what, get nowhere, right? By the way, if you're wondering why long-term holders are selling right now, you might have seen that that's something else that's happening. Guess what, folks? If you get into something at the ground floor, you know, the first, before anybody thinks it's anything, they all think it's a scam, whatever, right? And that eventually goes mainstream, you should be exiting a lot of your position. Because now you have proof of concept, right? And with that institutional involvement, you can actually get paid. It's silly not to think somebody that's got thousands of Bitcoin isn't going to sell them right now with all the institutional movement in. right? And you say, oh, but you're going to sell it for fiat and fiat's evil, it's going down. Yeah, I agree. Fiat's a pain in the butt. But you know what? I'd rather spend fiat to pay for my other stuff than Bitcoin, right? I'd rather sell that Bitcoin into fiat, use that to take, because fiat's not going anywhere, guys. It's going to, see, here's the thing. I put out a tweet. So 2021, Jack Dorsey came up and he said, hyperinflation is going to change everything and it's here. And I said, no. I said, you're wrong. This is outside your wheelhouse. Absolutely not. That's not how it works. You know, kind of saying, listen, we're not in hype. And this was back then when the Fed was printing all this money, because that's what everybody thought, right? Oh my God, they're printing all this money. Everybody thinks hyperinflation is just this printing of money, but it's not. Hyperinflation, one, yes, you have to have an increase in money, but more importantly, you have to have a loss of belief in that currency. You need to see the velocity of your money supply shooting up. People have to be scared to hold it. And you're going to sit here and maybe you're in these online and you're going to be in these echo chambers, right? Because that's what social media is good at doing, putting you in echo chambers. And you're going to feel like, oh my God, everybody's talking about how bad fiat is and how it's going to die next year. And and it's hard not to believe that. But the reality of it is, if you're old like me, you've seen the romanticization of the death of the dollar every decade for, 50 years, right? Doesn't happen. What usually happens with fiat, especially in this day and age of the way in which, we have all these central bank tools and all these things, right? And the way global finance is most fiat currencies don't end up in hyperinflation. They just molt. Right? What I mean is they go through a restructure, a little bit of a changing, and they came back up as another fiat system. Right? And so hyperinflation, if it does happen, it only ends when new currency, a belief in a new currency system comes up, right? And you say, oh, but I believe in Bitcoin. I believe, yeah, but guys, realistically, we're in the minority as far as really, really believing in Bitcoin. And what's going to happen is something, again, we talk about on Beards and Bitcoin all the time over the last year and a half, which is this idea that the people coming into Bitcoin now are a lot less concerned with the original thesis, the original, why Bitcoin. They're not really caring about that. Because government and banks and all these things are going to give them reasons to allow banks to hold their Bitcoin, right? To go into ETFs rather than hold spot Bitcoin itself, to do all these things, right? There is much more of I get more if I do this other thing. And that's what people care about. Okay? That's what people care about. And that's what we're going to continue to see. And so what you're going to see, these banks and everything are going to come out and they're going to keep giving you reasons. And government's going to come out probably with tax rules and things eventually that'll give you reasons not to actually hold spot Bitcoin. They'll give you monetary reasons why, or tax reasons why you should hold ETFs, or why banks should hold your Bitcoin rather than you, right? Custody it and everything and hold it. This is the way things are going. This is the way that financial systems work. This is the way it all heads. But again, none of this means that you shouldn't be in Bitcoin. None of this means that Bitcoin is going to fail. None of this means that Bitcoin isn't going to do as good as it could do. You just have to understand it from a different lens. It doesn't mean you can't hold spot Bitcoin. I'm a firm believer in holding spot Bitcoin. I am. But the realities of the overall system, of the populace in total, and whatnot, is this. This is the reality that comes from these things. This is the way the system works. This is the way the system's always going to work. Okay? So is the US dollar going to hyperinflate? No. And I'll tell you what, I get so much. If you guys saw that X thread on that, when I posted that, I just did a thing here recently, I guess within this last week, where I just kind of posted it because somebody had actually replied to it like 4 or 5 years later now. And I put up a post on X. I said, man, people still replying to this. It's crazy, right? And it came into this big, huge thread. went a little bit viral, I guess. But most people in that thread don't understand what hyperinflation really is. They think hyperinflation is just a production of money. They think it's just, oh, my prices are twice as expensive 5 years later. No, that's painful. That's not hyperinflation, right? Words matter. Words matter because there are specific tools that the government, the Fed Bank, the central bank, what can use to mitigate that hyperinflation possibility if it's not there yet. If we're at that hyperinflation mark, then guess what? There's really nothing that can be done. So just because you feel, right? Everybody likes to use emotions. Well, I feel like, well, it doesn't matter what you feel, right? There is a reason that Kager back in 1956 said that hyperinflation was this 50% month over month, not a cumulative, this is month over month, 50% rise in prices. You go to the grocery store, an hour later, you get to check out, and your prices are higher than when you got the stuff together, right? This is what we're talking about. This is hyperinflation. Prior to that, you've still got a chance to keep it from happening. But what Kager found out, and by the way, Kager studied every hyperinflation in history to come up with his thesis and his idea. And this is why we go by this today. Okay? So that's where we're at. And so, yeah, if you think if your thesis for Bitcoin is that the dollar has to hyperinflate, you're not understanding. You're missing, and you're going to miss a lot of opportunity because of that, right? In life, just saying I feel, I'm going to be honest with you, and it may hurt your feelings. It don't mean crap. I don't care what you feel. If it's in relation to what a generally recognized understanding of something is, what you feel doesn't really matter. It's feelings, it's emotions. It's like the market. The market doesn't care what you feel, right? But you're going to see Bitcoin continue to do well. You're going to see it continue to go up overall, right? Over the years, you're going to see it continue to rise without the dollar hyper inflating, without all these things happening, these things that you believe need to happen, because they don't. All right. So that's why people like JP Morgan are coming out, or banks like JP Morgan come out and say, hey, listen, go ahead and put your Bitcoin in here, your Ethereum in here, because for them, that's a longer term hold. And they know historically that if you've got Bitcoin, it's going to be worth more, right? A lot better for them than gold, for instance. Which, by the way, gold has been on a moonshot here this year. But guess what? That almost vertical rise, that isn't how you start something. That's how you end something. If you can understand that Bitcoin had blow-off tops in previous cycles, and that marked the end, right? That vertical move up, that blow-off top, right? And you see gold doing that now, and you don't think the same thing, what are you doing? It all works the same way. All right. So yeah, follow me on X, YouTube, Facebook, Instagram, whatever. I'll put out a link later. You can get on the wait list. There's only going to be so many spots available for that, because that's how these live stream things work. There's only so much available. Attendees that you can do. But if you want to learn that system that has Mr. Roy Peters here, 5 for 7 today, I'm going to be teaching that. It's going to change the way you think about trading. Let me see here. Let's look at Bitcoin. All right. So this is really where we're at with Bitcoin. This right here. It's really this kind of funnel looking thing here. It's not, stop listening to people that are drawing all these, things the way they want them to look. Okay. That isn't how it's done. We're getting higher. We're getting higher highs with these lower lows. You're kind of moving that out, right? We're getting that expansion as we get higher up. Now, if I'm looking here, there's really kind of two ways to look at this. You can look at this as a 1, 2, 3, 4. And we're working on 5 here. Or you can maybe change this in here where you get this 3 up here. But either way, the important thing is here we are now. Okay? Here we are now. And so off this last swing low here at 70 somewhat thousand, we have 1, 2, 3, 4, 5. Now the kicker is after that 5, we've got the 3 down, and then we have what appears to be 3 up. 3 down and 3 up to a new all-time high. Now, this is, if you don't know Elliott wave, you're going to go, so what? What? So who cares? What? No. If this is 3 down and this is 3 up, this becomes a flat correction, which is just a temporary stop along the way. Right? It's just a correction, right? And the key is you get this 3 waves up here. If you've got 5 for 1 and 5 for 3 there, I'm sorry, not 3 here. But if on your other ones coming up here, if you've got 5 and 5, whatever, and then you get to a 3 here, no, that's just a correction. So right now, I'm looking at this as 1 and possibly 2 complete here. And if this is going to be a 1 and a 2 here off this 74,000 low, off this pullback here, that gives us a wave 3 up here at 184,690 or so. Wave 5 up here at around, I don't have it quite far enough up there, at around 203,850. This is the Coinbase Bitcoin USD chart. Now, what's interesting about this is this gives us this breakout, which means wave 4 pulls back to about 153.7. That's just above 150,000. 150 is a very psychological level. So breaking out above it and pulling back to it as support makes a lot of sense. And then hitting the next psychological level at 200,000 makes a lot of sense. This is what I'm looking at. If we can get this breakout higher here, this is what I'm looking at. And what does that mean? That means probably extending at least into March of next year, which takes us, as I was talking about earlier, beyond the usual 4-year cycle, right? But again, this 4.5, 5-year cycle thing from a 4-year cycle is a product of institutional involvement. It is what we see historically on assets like this that were very risky, very, whatnot at the beginning, and then they become more mainstream. And you get the institutional involvement. This is what we see. It's not just Bitcoin. This is what historically happens. So for here, we're looking for this breakout into a new all-time high to set up this move toward 203,000. Now, does it have to end there? No, it doesn't. We could get a larger push higher. But right now, without any type of blow off top, with just going by our normal targets, our generally accepted targets, that's where we would be headed with Bitcoin. Does that make sense? I know a lot of you probably in here, you don't know, these things very well. And you're probably like, oh no, you're such an idiot. Yeah, I've been called worse. It's all right. I've continued to be right over and over and over again. Now, am I guaranteeing you it's going to go there? No, I'm not guaranteeing you a damn thing. The only guarantee in trading, in case you guys have not figured this out yet, is that you're going to lose money from time to time, no matter how long you've been doing this. And the newer you are at doing it, the newer you are to trading in markets, the more money you're going to lose and the more often you're going to lose it. That's the absolute only guarantee here. If you believe anything else, you're mistaken. You are sadly, sadly, sadly mistaken. Okay? That said, when you're trading, you should be trying to trade with the idea that you're trying to put the probabilities more in your favor. Stop taking every trade just because there's a chance. Start, learning about markets. Start trying to figure it out. What's going on? What's doing? We'll shave a lot of time off you, at the Trading Academy. Maybe you can do it yourself. I never did it myself. I'm a very smart person, but my trading didn't pick up until I started learning from people. I started, paying people to learn. I mean, that was me. Some people can do it. They're very rare, but some people can do it. We all want to think we're that person. And of course, most of us aren't. And instead of saying, well, I failed because, of me, we like to then blame it on everybody else, right? Victim mentality. It's Wall Street, it's crypto whales, it's all manipulated. Listen, guys. Roy's gone 5 and 7 today on my trap and trend system, okay? 5 and 7 today alone on the very short time frames, on 1 minute time frames. Even if you wanted to believe that the market was manipulated, he still went 5 and 7. 5 of 7. Still. What does that tell you? Stop worrying about it. Stop trying to convince everybody that's manipulated. The only people out there trying to convince you that the market is manipulated are those losing money. The rest of us, we don't worry about it either way. If you want to say it is, fine. I'm not going to argue with you about it. Say it is all you want. I'm still making money. Roy's still making money. Bernardo's still making money, right? These guys are out there doing it. So stop focusing so much on why everything's everybody else's fault and just figure out, how do I make money? Okay? David, you were followed by a fake Tillman yesterday? You should let Tillman know. Yeah, a lot of them got getting up there and then faking him out here lately. It is what it is. It's just awful. People trying to scam your money, guys, right? Don't want to do that. But this is the setup right here. This is what we're looking at. Now let's zoom in a little bit. Let's kind of see where we are here. So right now, the way I'm looking at this, so I talked about Elliott wave, right? Well, the thing about a flat correction, an expanded flat correction like this, right, is that it prints a reaccumulation range in Wyckoff. So if you understand how to do Wyckoff, then you start looking at the price action and volume here. And you look here, you go, well, there's a spring. This looks like a successful test. You've got a lot less volume on that test. It's marginally lower than the spring. Usually, most of the time, your test is going to be a higher low, but it can be a lower low as long as it's kind of marginally there. The real key of what you're looking at is your price action and volume relationship. And there's significantly less result on the effort here than there was on this candle, which gave us the move up. Now, here's the thing. The real confirmation comes on taking out this high area here. So we're trying to see, can we take out this area pretty quickly here? I'd say maybe by beginning of next week sometime. Can we get out and break out above here? If we can do that, that should confirm a good test of this spring. And we should be looking to break out higher, which then opens up everything else, right? Now, locally, I'm looking at this potentially being a leading diagonal up, a 1 and a 2 here. So as long as this swing low holds around 106,000, 700, depending on what chart you're looking at, right? As long as that holds and we break out up here above this 114,000 area, this swing high from Tuesday, hold here, break out here, that would give us a 1 and a 2. So locally, that would give us 5 waves up around 127, 587. It doesn't mean we can't overextend higher, but again, based on wave 3 at the 1618, about 123.6. Wave 4, 38.2 pullback to 117, 178. Wave 5 up to the 61.8 of wave 4, up there around 127, 587. This also, I would love to see this, because what that does is it gets us up here, shakes out all the people going long, comes back in, convinces everybody that's going to go short, and then kicks back up and shakes out everybody that went short. So you shake out the longs, you shake out the shorts, and then you take off. And most often that's what you get in Wyckoff here, especially when you have a spring. You'll have a move up into the swing high area, get rejected, pull back in the top half of the range, and then you'll break out. and you'll break out with volume on that. That again is usually a wave 3. It's your participation wave in terms of Elliott wave. But all these things come together and they all explain what's going on there. If you just know one and not the other, by learning the other, you end up understanding, okay, this is the relationship. This is why and how it's working. Again, this is all stuff that, that we teach daily there at the Trading Academy over at members.texaswestcapital.com. So if you don't understand it here, that's fine. It is what it is. But if you ever decide that you really want to learn, if you're tired of playing games, you're tired of goofing off, if you're tired of losing money consistently, and you want to learn, well, how does the system actually work? How does the market actually work? How does liquidity actually work? Where does it come up? Why? How can we figure out where it's going to come up next? These are all the things we teach, over there, and you can learn it. You just have to decide if you want to keep goofing around and playing silly games or if you really want to start making money. It really is as simple as that. We don't teach parlor tricks. A lot of what you find online are people just teaching parlor tricks, things that work sometimes in specific, very narrow circumstances, which are fine if they do. But if you're trying to, trade consistently with something so, insignificant like that, you're going to have a lot of trouble with it, right? Let me zoom in a little bit more here. So right now we're sitting above, as you can see here, the weekly pivot. This is the 4-hour time frame, weekly pivot. We had this big volume coming up here. We had this on the 15-minute and on the 1-hour candle. We had this big volume, right here. And, again, you've got this trend up and you have a significant spike of volume at the top with a large wick especially. Look at how much bigger that volume is. Now, that was because that happened right there at the CPI drop, okay? But usually when you see that, you're going to go back the other way. Every once in a while, price breaks out higher, and this just kind of clears the way. So, what I told everybody this morning was, listen, now we just have to see, do we break down or do we break out? Again, most of the time, when your trend is up like this, and you get a sudden spike of volume at the top, that marks the top of that trend movement there, and then you get the reversal of the pullback. So that's kind of where we're at the moment here. And so, it's a pullback. It is what it is. No big deal. What I like about this movement versus this movement here is that this was one big, strong movement up, which makes it easy to fall back down through it. Here, you've got price action pulling back along the way, which gives you more support. It gives you more volume there along the way rather than just a quick drop through it. You have more support areas. Right now on the 1 hour, you can see that we've got from over here to over here, we've got higher lows. That same point, we've got lower lows here. That's hidden bullish divergence on there. So, I would look for the potential to get at least a bounce, if not a reversal on the pullback here and head up. Let me see here. If I'm looking at this, if I'm looking, I would go 1, 2, 3, 4, 1, 2, 3, 4, 5. Then probably like 3 down, 3 up, and maybe 5 back. So looking like a flat correction here with a diagonal here, right? Leading diagonal, kind of what we were looking at here. So if this is going to be the low here, and this is a 1 and this is a 2, it's likely that this is probably a leading diagonal here and then a flat correction coming out here. So it gets us a 1 and a 2 on this pullback here, which would have pulled us back here about 38.2. And a lot of times, more times than not, if you have a leading diagonal, you're going to get only a 38.2, maybe a 50% pullback, usually closer to that 38.2, because the 38.2 is usually where you have your overlapping price action happening. That's why there's a reason for it. It's not just because it's the 38.2. It's because at that 38.2 is where you have all that overlapping. So you have that price action giving you that higher volume where the market is interested, right? So if we are to break out higher here above this morning swing high, then locally, I would say we've probably got from this low down here, we've probably got 5 waves up around 119,476 or so on this particular chart. So right around there, whatever chart you're looking at. But we got to break out higher here to get that to go. It's not just instantly, oh yeah, it's there, that's it. That isn't how you trade in real life, guys. Real life is all about figuring out what's going on, figuring out where your confirmation areas are, figuring out where your invalidation levels are. Breaking down below the swing low here will invalidate the idea that this is a leading diagonal as a 1 with a flat as a 2. We could still pull back further and be fine, but breaking down below here invalidates that idea. Let me see here. Diego says that C down is such a clear 5 waves anyway. You can just trade it right now with the stop below C. Yeah, exactly. Let me zoom back out here. What Diego's talking about is this right here. 1, 2, 3, 4, 5. So again, a flat correction is 3 down, 3 up, and 5 down. And your 5th wave is usually pretty sharp on that. Your A wave or your B wave are going to be sharp, and then your C wave is usually sharp. And so in this case, of course, you have the move down, a little bit extended move up, and then sharp move back down here, giving us, again, on Wyckoff, what appears to be a spring, and a test of that spring here. But even with that, we want kind of this move up here above this, 114, 115, 116 area to really kind of confirm this as a proper test completed. Right now, based on these 2 candles and volume and price action, we would say this is a successful test of that spring. But here we want this breakout here to give us more oomph on the likelihood of that being it. So even if you're sitting here going, well, I don't really know what you're saying, Chris, but I don't believe you anyway, that's fine. You don't have to. But if you're getting back up here and breaking out above this area here, you should believe me. So that's all you got to do now. You don't have to believe what I'm saying down here. You don't have to think Elliott wave works. You don't have to think Wyckoff works. Got 100 plus years telling you both do, but whatever. It's on you, right? It's your thing. But getting out through here is significantly increases the odds that you're going to break out to a new all-time high. And I think that's what happens. A lot of people get really, they get, when they look at it, they get so caught up in their emotions, kind of like the hyperinflation thing, right? I can sit here and tell you we are not in hyperinflation. Right now, we are not. We're not going to be in the next year or the next 5 years, right? I can tell you that with the utmost confidence. And people are still arguing with me about, oh, we are. I say, listen, here is the definition. And here's a long explainer why that, why it is what it is. And people are still going to argue and say, but I feel, but I don't think, but I'm not convinced. It's because people are emotional. Same thing happens with things like Elliott wave or Wyckoff. Now, a big part on that is because a lot of the people that you look at online have no clue what the hell they're doing when it comes to Elliott wave and Wyckoff. I have seen so many large accounts right now posting this same range, this same Bitcoin range here that I've got, and they post a schematic, a Wyckoff schematic of distribution or of accumulation. Not a single one of those folks is talking about price and volume relationship, which is what Wyckoff is. The schematics are just there to teach new Wyckofians, those who are learning, what the phases are and where the labels and what the labels are. That's all they are. They're not there to say, listen, if it looks like this, it means it's this. Because guess what, folks? If nobody's told you yet, distribution, redistribution, accumulation, reaccumulation, they can all look damn near exactly the same. It is proper identification of what's going on with volume and price action at specific points within that range that tells you whether it's more likely or not to be accumulation or distribution. Simply putting up price action on a picture schematic means absolutely nothing. And every Wakofian out there will laugh at you. They will laugh at you until your shame and your embarrassment is beyond, complete, is beyond ever coming back from. But the sad thing about that is y'all who maybe don't know what that is, right? They're going to make, it's going to look like, you look at the same reason they're posting it there, because it looks like. And maybe they'll be right. You've got you got a 50% chance, right? Either it is or it isn't. If you put up an accumulation schematic, it either is or isn't accumulation. If it goes out, breaks out higher, you can celebrate, say, oh, look, it was accumulation. If you put up a distribution schematic and it breaks down lower, you go, hey, look, I got a 50-50 chance to be right. And I was right. Right? But it doesn't mean you were right for any specific reason. It means you got a 50-50 chance. What I have here is what I believe is the correct reading on it. But again, the other thing about Wyckoff is it's not about telling the chart what it has to be. It's about reading the chart as it develops. So at this point, based on volume and price action relationships, where we should be looking, this is what we see. By the way, most of your guys up there are also saying the range starts way back here. They're missing the idea that this is your preliminary supply, and then this becomes your buying climax, right? So they're already getting it wrong on that point. But this is what we're looking here. Darian, what's up? He says, no one ever mentions volume. Exactly. And you cannot do Wyckofian analysis without volume. It is absolutely required. It is requisite for that. I know I'm getting a little burned up here about it, but because I see this online so much, and it's by big accounts, and people who don't know, like probably many of y'all, follow this, and you think that it's correct what they're doing, and you think they know what they're talking about. And that's why you follow them, and that's why you listen. And maybe you trade based on it. Well, guess what? If you trade based on it, and that's what they're doing, you have a 50-50 shot. They have done absolutely nothing for you. It either is or it isn't. But they have given you no real reason to believe them that it's whatever they say, whether it's accumulation or distribution. Okay? You have to understand that, because I don't want you going out there and getting duped by these people that are doing this. Now, I can't force you to listen to me. I can't force you to go, oh my God, this is a guy that's been using Wyckoff for 20 years. He knows what he's talking about. I can't do that. I can't force you to do that. But hopefully you'll listen. Okay? But that's what I mean earlier when I was talking about most of these accounts out here. They're just trying to drum up engagement. They're making their money off you joining their affiliate links, or maybe they're getting paid. I don't even know what the creator thing, what X pays anymore, on the impressions or anything like that, right? But they're getting paid somehow off that. They just want to look smart. They don't want to actually help you out. And if it doesn't do what they say it's going to do, they'll tell you, oh, look, it was wrong. Not I was wrong. They won't say they were wrong. They'll say it's some manipulation or something, which is nonsense. Okay? Mr. Smith says, also, no one could have foreseen a $38 trillion debt since the early 2000s. What does that mean, Mr. Smith? Are you talking about the hyperinflation thing? Well, that has nothing to do with it. Because our VIX, or not our VIX, but our, what's the word? Velocity of our M2 money supply in the last 20 years has dropped from 2.5 to 1.3. It is dropping. If your velocity drops, that means people are holding, whether they're saving or they're putting it in investments, but they're not trying to get rid of it. You guys think about what hyperinflation is. Hyperinflation is because people lose faith. They lose belief in that currency. So the idea is, I don't want to hold this because tomorrow it's going to be worth 50% less. So I need to get rid of it. Velocity increases. You cannot have hyperinflation without velocity increasing, because that velocity tells you people are not getting rid of it. So again, that's where I caution you about social media. You get stuck in echo chambers online, and it feels like oh my God, the dollar's going to die. Everybody lost belief in it. Nobody believes in it. Nobody's using it. 60 to 70% of the world's debt is still denominated in dollars. The petrodollar still commands about 80% of oil transactions. Oh, but BRICS has come out, they're going to do maybe. But also, and this is what I've talked about before, I think the US dollar loses a lot of its reserve currency status over the next few decades. But I see it more as a multipolar world where you have competing currencies. Might have the US dollar, you might have whatever BRICS is going to do if they ever really push it, right? If it ever really catches on. You know, you're going to have these other things, but it doesn't mean that the dollar just dies off, right? Because the dollar is ingrained in the system. Here's the other thing about the dollar, guys. And I'm probably going to get a bit nerdy here for you, so I might put you to sleep. But the reality of it is the US dollar is so ingrained in what's going on with the world's financial scape, right? That belief now is not even just the US, it's a worldwide thing. It is the plumbing, is belief in that plumbing. Euro dollars, other countries that because it's so utilized. Like I said, 60 to 70% of the world's debt is currently denominated in US dollars. It means it has to be paid in US dollars. We have outsources from just the US into it. So, don't come up and complain, don't come up and compare Weimar, 1921, Weimar Germany with today. First of all, they weren't a world reserve currency. They had to pay off debt in foreign currency. We pay our own debt in our own currency. This is a big difference. This is a significant difference in it, right? But it was because people lost faith in their currency in Weimar back then. That's what caused the hyperinflation. Not just printing. They had to print more because people lost faith. That's why they were printing more. Here, we're not printing more because people are losing faith. And here's the thing that nobody wants to listen to and understand. When it comes to, if you're like the US and you can, pay your own debt with your own dollars and all that stuff, right? Guess what, folks? You can continue to print more and more money as long as the demand is still there, that belief. And that's what we have. So yeah, it was a lot of money printed up since 2000. It was significantly more money printed up since 2020, right? But in the grand scheme of things, that doesn't matter. All that matters is that demand for that is still there. And we see that it is, because even during that time, to get to this point, as I told you, over the last 20 years, velocity of our M2 money supply has dropped from 2.5 to 1.3. Okay? So there's nothing, as different as things are today, it's still, that doesn't really affect the way in which hyperinflation works. It still comes to the belief. Now, prior, there was this thing called the Triffin dilemma, right? I'm not going to go into all that because I'm really going to bore you with that. But we can look at it now, again, because of the plumbing, because of the way that the dollar is used throughout the world, euro, dollar, credit, all this kind of stuff, all these other countries, right? The way it's held offshore, all these things, they just kind of support that Triffin dilemma just through a new lens. So you can look it up if you want. You can look up Triffin dilemma. You can go to X. Look up. I actually explained it in there in one of the replies to somebody. Of course, they didn't want to listen. It is what it is. Again, I tell you, people get emotional. They don't want to listen to the reality, right? I'm that economics finance nerd, right? I'm the guy who went to undergrad, studied economics, studied finance, studied political theory, philosophy, right? And then went on and got master's degrees in applied economic psychology, homeland security. I got a law degree, right? I'm that nerd, right? It all comes together. It all explains it, though. And I'm not saying, believe me, because I have whatever degrees. That's not what I'm saying. I'm just saying I'm that nerd. I'm the guy who goes out and really tries to understand this stuff. But if you thought hyperinflation is here or is coming, next year, 5 years, whatever, you're wrong. It's the odds, especially in the next 5 years of it happening, are so astronomically low right now. Now, nothing can be guaranteed. We can't guarantee it wouldn't happen, right? But just like in the markets, in life, you should be working with probabilities. How do I short probabilities that are more likely to come out correct than wrong? That's how you should be living life. But a lot of people today are the whole YOLO degen, right? They go online, they're like, oh, I'm such a degen in crypto. Like it's something to be proud of. Why would you be proud of that? Why would you be proud that you're purposely not being serious about your money, about your future? You see what I'm saying? Everything in markets and life and whatnot starts with belief. It all starts, middle, end on belief. And, again, currency is no different, right? But here's the one thing. You can say the dollar is not backed by anything right now. I'll tell you, it is backed. It is backed by the U.S. military. Okay? The first and second largest air forces in the world both belong to the U.S. That is the Air Force, the U.S. Air Force, and the U.S. Navy has the second largest air force in the world. We have the largest Navy, right? We have boots on the ground in 192 or 194 recognized countries, right? Whether you like it or not, the dollar is backed by the full faith and force of the U.S. military. But if Bitcoin is brought in, we're going back to what I was talking about at the beginning, right? If Bitcoin's brought into the rails, right? If it becomes that collateral upon which fiat is put, the dollar, for instance, well, now you have energy that backs the dollar. And so, kind of going out a little bit on a limb here. Remember when Trump first came in, before he first came in as president here in 2024? And he said he wants to make the U.S. the crypto mining capital of the world and whatnot. If you believe that what the U.S. is doing is waiting for gold to run up like it is so that it can redenominate, right? Because gold, according to U.S., is still based on that decades ago price, right? It's not current price. So if you believe he wants it to run up so they can redenominate it in that, and then Bitcoin to become the functional bottom layer of the financial system, it makes sense that when he says, hey, listen, I want the U.S. to become, my goal is to make the U.S. the mining capital of the world. That makes sense, right? You bring mining power over here, because if mining power is elsewhere, China can shut it down, Russia can shut it down, right? But here, keep it going. Now, as far as decentralization goes, there's another, that's a whole nother argument there. But you can start, if you believe in that kind of thing, you can start to kind of maybe connect some dots, right? But at the end of the day, what I'm saying about the US dollar is we're not in hyperinflation right now. We're nowhere near it. We want, 20%, even if that were over a year, is nothing close to 50% month over month over month, right? It's not even 50% 1 month. It's 50% consistently, month after month after month. That's hyperinflation, all right? Because at 50%, velocity is just in a freeform collapse. It's just you're not going to be able to stop it. Based on all the historical, what's going on with the hyperinflation historically, right? Even if you had 20% a year, 20% monthly, would it be month after month after month, right? But what are we looking at right now? If you believe government's numbers, CPI just came in at 3%, right? If you don't believe, you go to trueflation, you're looking at 7 or 8%. Again, that's nowhere near 50% month after month after month after month, right? It's not. 7% a year, 3% a year. So yes, while prices are up, and it sucks that prices are up, and it's painful to a lot of people, it's not hyperinflation. The dollar is still backed by the U.S. military. And if Bitcoin continues its path here to become part of that bottom layer that creates functionality and increases, belief in the dollar. When I mean, now we got energy as what's behind the dollar, right? Back in the dollar. It's important. It's important. Real quick here. So, this is kind of where we're at here. We're starting to get a little bump up again here. Again, we want to see this break out through this 115, 116 area. If we can get that, the odds are significant that we're going to hit a new all-time high. And if we do that again, we've got that wave 3 target up there around that 184,693. Somebody was telling me that they're using ONWB as a proxy, a stock proxy for Bitcoin. This is the Bitwise Bitcoin Standard ETF. Okay. And again, you look at 1, 2, 3, 4, 5, ABC, ABC, and we're getting an ABC here. So it looks like a double zigzag flat correction here, finding support at the monthly pivot. Let me see here. Bullish or hidden bullish divergence right here. You got higher lows here. You got lower lows here. Stochastic RSI. Whoops. Can't click in there. Reset and oversold. Cross bullishly, threatening to break out. RSI back on the bullish side of neutral. Trying to get up here to make a bullish cross as well. But the very fact that you can create 5 waves up and 3 down, 3 up, and 3 more back down here, and that pullback, we came in sideways, rejected around the R1 pivot, pulled back to the pivot. By the way, pivots is another thing I teach, how to use them intelligently, right? But this is a specific setup we look for. Come in sideways, hit the R1, reject, pull back to the pivot, bounce. And you did that on hidden bullish divergence. I mean, everything on this daily time frame is screaming for it to head out higher. So even on this, you'd be looking at a 1 and a 2 here. That give you 3 up here around 50 and a quarter, 5 waves up around $55 here on ONB or OWNB. All right. So again, if you're looking at Bitcoin ETFs as proxies, this looks pretty good right there. Looks pretty good. Real quick here, I promised I'd look at Ethereum too. Here's what I'm looking at on Ethereum. So you can see here we've got 1, 2, 3, 4, 5. That's a final top up there at all-time high. Okay, from where we were at, that's fine. Yeah, you can see here 1, 2, 3, 4, 5, 3 on the pullback, 1, 2, 3. Right, so we're looking here, right? 1, 2, 3 on the pullback, 5 up, 3 on the pullback, 5 up, right? We're getting there. That's fine. What do we have here though? We have our A. We have a B, we have a C, right? So we have like a 1, 2, 3, 4, 5 here. Oops, 1, 2, 3, 4, 5 for A, ABC for B, 1, 2, 3, 4, 5 for C. Looks like a W. Looks like ABC is a W, X, ABC is a Y for wave X, and then ABC for wave Y. So again, looks like a double zigzag correction here. Also, from a pattern standpoint, this looks like, excuse me, maybe some sort of descending, expanding wedge here with a throw under. Now, I would have preferred to see like this move continue up toward the top here. We didn't get it, so I'm a little bit iffy on the pattern itself. But this is a support line here, and we did get a throw under and strong move back up. Again, on expansive volume. On this move down, look at volume. Volume has not been up there, right? We had a lot of volume on this move. And since then, volume's kind of stayed muted all the way through until we got this drop and pop back up. This looks like could be a triangle here, right? A, B, C, D, E. A lot of times when you see something looks like a triangle, it's either a triangle, which would mean we'd have one more drop lower, because it would be a fourth wave. You'd have a 1, 2, 3, 4 as a triangle, and 5. We'd sweep this low down here. Or it sets up as a 1, 2, 1, 2. And when it's a 1, 2, 1, 2, what you get is an overextended wave 3. You usually get a sharp, strong move up when it breaks out here, in this area here. So even if you don't want to believe this count here, just look locally. It's possibly a triangle. If we're breaking out above this swing high, well, then you can't have A, B, C, D, and E here, right? Now it could be A, B, C, and then we'd have to get a D and then an E and then move down, right? We're breaking out here above this swing high, it's definitely not a triangle. And that way we'd look at it definitely as a 1, 2, 1, 2 here on that breakout. All right, so there's lots of ways that you can look at it there. You don't have to believe the count I have here. Just looking locally, you can say, okay, we've got consolidation. Maybe it's a triangle. If it's a triangle, we're going to have one more push lower, because a triangle is, what do you say, is the final move in a trend before it reverses and goes the other way. Okay. So again, this would be A, B, C, D, E. Be what we look at. But if we're breaking out up here above 42.93.60, this is not a triangle. Instead, we look at it as a 1, 2, 1, 2, and you should expect a nice strong push up through here to get us to that new all-time high. And you'd be looking at $6,000, maybe more off that next push up, kind of getting you there. Okay? So that's what we're looking at there. But the big things that you should have learned today that hopefully I've made clear: the US dollar is not backed by nothing, right? It's backed by the US military. And if Bitcoin continues on the road that it's on, it's going to be backed by hash power, hash rate, energy, right? 2, US dollar is not currently in hyperinflation, nor is it anywhere near it. Again, hyperinflation is a 50% month after month after month. 50% this month, 50% next month, 50% next month. That's hyperinflation. 50% inflation each month, okay? Not cumulative, each month. So we're nowhere near that. But we don't have to be in hyperinflation for Bitcoin to do extremely well. This is the thing, okay? 3, it does look like Bitcoin still got further higher. Now, again, we still need to get through the areas we talked about. I'm not guaranteeing you it's going to go up, but I'm saying right now with the count we're looking at, I'm looking up toward 200,000. 4, that means the current cycle we're in moves from a 4-year to maybe a 4.5, maybe even a 5-year cycle, which historically is what happens to assets like this that are on the fringe and then become mainstream. And it happens precisely because of the institutional involvement, which shrinks down the volatility, right? The next thing, hopefully you learned, is just because somebody online is putting out a Wyckoff schematic and price action may look something like it, doesn't mean you should listen to them. If they are not talking about the price action and volume relationship, which even if they did, if you don't understand it, you wouldn't know whether they're actually correctly identifying it and whatnot, right? But at least it gives it something. At least it says, well, at least they know there's supposed to be some sort of volume price action relationship at specific points, right? And what it means. But if they're just throwing up a schematic and whatever, stop listening to them. Because either one, they're just trying to get engagement and they don't know what Wyckoff is or how to use it. 2, they think that's all it needs for Wyckoff, and really they're no better off than you. They're no smarter than you when it comes to markets. So why are you listening to them? Okay? Makes sense? The next thing, proper risk management. Your life and Bitcoin, or your trading by extension, should be based on probabilities. Not FOMO, not degen, not YOLO. Are you serious about your future? If you are, stop with that nonsense. The only people that laugh and say, oh yeah, when you say YOLO or FOMO or degen, are others. But if you really want to get somewhere, stop listening to the people who aren't getting there. Stop. You can't. One of the greatest things I ever learned growing up, right? One of the greatest things I ever learned is that if you want to do better, if you want to get further than where you are in life, then you have to surround yourself with people who are further. You want to surround yourself with people that are there. They're at that point or further that you want to be. Because as long as you surround yourself with the people that are at that same level as you, you're never going to be able to push yourself out of that. There is something serious. There's something significant about proximity. There's actually, you guys can look this up if you want. There are actually some studies. I don't have the links on me at the moment because it just hit me to talk about it. But in psychological studies, there are studies out there about proximity, about how the people that you hang around and you devote your time to, about the kind of effect they have on you and where you're going. Legit. So, you got to figure out who's doing what right. And then align yourself with those people. And hey, man, you know what? Listen, if your goal is just to be silly and YOLO and you don't care about your future, whatever, feel free to hang around everybody that talks like they're a degen proudly and FOMO proudly and YOLO proudly, okay? Do what you need to do. I'm not here to judge you on that. But I'm here to be that wake-up call that if you're looking to do better, to go further, to create some sort of life for not just you and your family, your immediate family, but generations beyond, you absolutely have to seek out those people who are doing those things, who are at those levels. You need to get yourself a seat at that table. And that's what we try and do, day in and day out there at TWC, right? It's all in how you view it. If you don't think that's what's going on when you're with somebody, around somebody, then it's not going to have that effect, right? But are you purposeful in the things you're doing? Are you purposeful in the goals you set? Are you purposeful when you say, listen, this is what I want to do. This is where I want my life to go. And I am serious about it. If you are, you absolutely have to understand proximity. You have to be around those who are where you want to get. Those who are focused on that. And this is why a lot of us outgrow our friends that we had when we were in high school. We move on. We don't really have those same friends 20 years later. If your goal is to continue to build and to be better and to do better. Because most of those people don't have that same, most people in life don't have that drive and that ambition, that real push. But if you do, you're going to find yourself with different friends, different contacts. You're going to find yourself seated at different tables. And that is absolutely required for the most likely chance of getting where you want to go, if it's beyond where you are. Okay? All right, so hopefully, we've done all that. Hopefully we've, I've maybe gotten rid of some of the misgivings and misthoughts you've had about markets, about Bitcoin, about hyperinflation, about the US dollar, all these things. And other than that, maybe life and trading. If you come here and you're listening right now, and your goal is, listen, I want to have success as a trader. I see this as a potential to get me from where I am to this much larger, much bigger goal I have. Then you have to take it seriously. You can't keep goofing around. You can't keep joking and pretending like these other things don't matter. They do. You can sit there and say something, say, oh, I'm just kidding, but your subconscious doesn't know you're kidding. Your subconscious pays attention to your consistency in what you say and do. If you're constantly joking about being a degen, YOLO, FOMO, and all that stuff, you may think, oh, I'm just kidding, but your subconscious is going to think that's what you're headed toward. You're not going to see the opportunities you need to see along the way. You're not going to commit the way you need to commit. So let me leave you with two things, folks, okay? First of all, other than make sure you're following me so I can post that link later, you can get on that wait list. I'm going to show you that same system that Roy was mentioning earlier here at the beginning, that he's 5 out of 7 today on his trading. Okay. So that takes no time at all to learn it, but there's only limited seats because you can't, the platforms only allow so many people to be in, right? So you're going to want to make sure you're on that wait list for that. And I'm going to put that link up on all my social media things here later today. So don't put it off. The minute you see it, jump on there. If you have to hit an alarm on the profile so that it notifies you when that comes out, make sure you do it, okay? But the 2 things I want to leave you with are, 1, the only thing you control is how much you lose. All right? That means proper risk management is the first, middle, and end of everything you do as a trader. And as by extension in life. Okay? Proper risk management. Better be quick because you're entering, Roy. You were already taught it, Roy. You don't get to come in. If you're in TWC, by the way, you don't have to join that link or whatever. You've got the training from Wednesday. Look in the price action training session from Wednesday. You've got it in there already, guys. If you're part of the Liquidity cartography program, the group coaching we do, you'll have access to that, okay? If you're not in that, you'll want to get on the wait list for this other thing. So yeah, proper risk management, absolutely important. The only thing you control is how much you lose, right? I forgot what the other thing was. Oh, Lordy. It's on my X profile. I posted it recently. I know I did. One of those great nuggets of wisdom on there. Go through them, find them. But, at the end of the day, guys, most of the people that are on there are on social media for 2 things. 1, so they can pretend to be smart and to have you thinking they're smart, feeds their ego. 2 is so that they can make money off your engagement. All right? Keep that in mind, especially when you're talking about things, related to making money, right? That consistency is absolutely required. The difference between somebody who does a thing and somebody who doesn't is consistency. Do you show up day in and day out, even when you don't want to? Do you practice correctly? Yeah, you can practice wrongly, like what you're practicing completely wrong, time and time again, and you're going to learn it wrong. You have to practice completely, correctly. So do you practice? Are you disciplined to come in even when you don't want to? You say you want to learn to trade. It's going to take you 5 months, we'll say, right? Are you going to be able to take 5, and you're working full time, you got a family, or maybe you're just working full time, right? Saturday nights for 5 months. Are you willing to not go out drinking with your buddies so that you can focus? Because that's one of the few times maybe that you have open that you can learn. Consistency, focus, discipline, effort. If you don't have those things, if you're not doing those things, you're not going to get successful, not just at trading, but anything else you want. If you haven't been doing those things, and you be honest with yourself, and most of us can't be honest with ourselves. We choose not to be. Be honest with yourself. If you're not doing those things, and you find yourself, of course, not being successful, make sure you acknowledge that. Be honest with yourself. Okay, self, you're screwing it up. You're screwing things up. Time to get it together. Time to get it proper. What's going on? You're the only one that has any control over what your future has in store for you. You're the only one. You completely control it. Whether you believe you do or you don't. If you believe you don't, that belief is going to keep you from getting where you want to get. But if you truly believe in the fact that you have control over what you're doing, that belief alone is going to power you to do the things you need to do. Consistency, focus, discipline, effort. Those things that are required for you to get from point A to point B. All right? All right, listen, I hope you all learned a lot here today. As always, remember the only thing you control is how much you lose. So please keep working on that risk management. If you missed the link today, you can jump over to members.texaswestcapital.com And when you go to that first page there, before logging in, signing in, joining, whatever, thing like that, there should be a link at the bottom of that page it'll say something like Trap and Trend webinar waitlist or something like that, Trap and Trend waitlist. And you'll want to click on that. It doesn't cost anything to join the waitlist on that. But that'll make sure that when we do open that up here, probably sometime today or sometime this weekend, that you're not going to get an email that's going to get lost. You're going to get an update from the platform. The platform will let you know, hey, listen, it's open there, or I'll set a message in there. And then you guys can see that, and then you can jump on that. All right? So much to learn here, guys. So much to learn, okay? Y'all have a great day. Have a great weekend. Trade safe. And I'll see you next Wednesday for Beards and Bitcoin, or hopefully before then over at Texas West Capital. Take care, everybody.
Trading tip: always manage risk before chasing gains.